All right. And my next question is for Fuquan. You invest in a variety of real estate backed assets. Are you leaning to any particular asset type, or are you, steering away from any others, and kind of walk us through that? What are you gravitating towards?
So the assets I fund invest in are real property, local here in New Jersey, where I've been investing the last 20 years, and also notes nationwide. So again, we don't have a crystal ball, but we believe, in the future, possibly sometime around Q3, the mom and pop landlords, will be forwarding trying to get liquidity. We actually have a marketing campaign in place now to try to do more buying on terms for people who need fast liquidity, who can't refinance. So that's the strategy that we're applying now, and we are not buying any more high-end fix and flips. So maybe probably about 10 months ago, I kind of switched over to lower end, buy and sell properties, $350,000 resale price or less.
Mm-hmm.
And also, with the rentals, because we have relationships with that Women and Children Program, Section 8, where we rent subsidy units. So we're still increasing our rentals. So we can find, someone who is looking for liquidity. We're exercising that option to kind of help them out and also take control of the property and, do whatever upgrades need to be done and get someone who is in the subsidized program into the unit so we can, kind of count on that cash flow. As far as the notes, and it's been a seller's market, as I mentioned, both for real estate and notes. So we just made a trade in Q1, and we're kind of still going through the onboarding process of that. We're actually probably, unless it's, single buyers, single people who have assets want liquidity, who's willing to, get favorable pricing, will definitely execute on that. But that's really the strategy. We're still doing notes and we're still doing real estate, more rentals than the flips, because again, we don't know where the pricing is going to be 15, 20%. You're hearing all types of stuff, but no one has a crystal ball. Like everyone else, we're just making sure that we have liquidity and, when the opportunity arises, that we can, definitely benefit from that. Again, first and foremost, the landlords that are looking for liquidity and have stuff in our geographical area, we're going to execute on that. And if we find opportunities in notes, it's still the same strategy, but just, no more high-end stuff. I actually have one high-end property now in the market, put on the market Valentine's Day, and who knows where the pricing is going to reset to that, but there's enough equity in that for us to be okay. But our strategy is pretty much still the same: diversified hybrid real estate investing model. The people who just did fix and flips or wholesales or just notes or had one type of investment strategy, where there's no buffer or a hedge against, what we're going through right now, those are the people who's going to feel the impact. So our strategy is pretty much the same: a mixed portfolio of real property and mortgage notes.
Excellent. One of the benefits of this happening is that it's happening to everyone. So everyone is going to be a little more apt to work with each other because it's happening to everyone. So,
and you have to, you have to keep in mind, and go back, I guess, to Mark's question a little bit. Lenders are looking at all these deals right now as if this is the last amount of money I have to do this deal, would I do this deal?
Sure.
And so that's how everyone is looking at everything right now. And just keep that in mind. Like Mike said, have some patience, because secondary markets are frozen and people are having to evaluate these deals on a asset by asset, case by case basis. And it's, everyone wants to keep some powder dry because we don't know what's going to happen.
And if you're just joining us, you can ask a question over there in the chat box, and time permitting, we'll ask the panelists before we can get out of here. And if we can't get to it by then, we'll try to answer you offline. So